Hello friends, a very warm welcome to my channel. In this video, we are going to talk about KNR Constructions. This talk was chosen in a Telegram poll with more than 500 votes. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that we upload. Now you can watch our videos in Hindi also. You can go to the settings section and choose your preferred language. Here is a small disclaimer as per SEBI regulations. You can read the disclaimer by pausing the video. We'll talk about KNR Constructions in three parts. In the first part, we'll understand the business of the company. In the second part, we'll understand the financials. And the third part, we'll talk about the valuations of the stock. So KNR Construction is a civil construction company. It does various infrastructure projects for the government and various government authorities. It builds roads, highways, flyovers, irrigation projects. It has also ventured into mining and aims to venture into other areas like solar, railways, etc. They work on two models. The first is EPC model, where they take up a project and as and when the project gets completed, they get their payment on milestone basis. The second one is the HAM or BOT model, which is an annuity model, wherein KNR Constructions also invest a part of equity in the project and they get the return in annuity model over a longer period of time. This is a higher margin business. This company was incorporated in 1995. It is headquartered at Hyderabad. So they have more than 2 decades of experience in this business. They have executed more than 9,000 kilometers of road construction projects. They are present in 12 states and they have a portfolio of 2 annuity projects and 8 HAM projects wherein they get regular income every year. In terms of their revenue split, they get 29% of their revenue from HAM projects, 34% from the EPC work that they do, 36% from irrigation and a minor 1% from subcontracting. Now let's talk about each business segment in detail. When we talk about their roads and highways projects, in this segment they take up projects for road construction and maintenance from central and state governments. So they make national highways, state highways. They also make flyovers on the way, urban roads. So in this segment, their clients are NHAI, which is National Highway Authority of India, GHMCs and the state authorities. The second segment is irrigation and water projects. So wherever the government wants the water supply to be established, for them KNR Construction sets up canals, reservoirs, water pipelines, etc. The third one, which is a relatively newer segment where this company has ventured into, is mining business. So they take up activities like mine development. They create infrastructure for coal and other mineral projects. Generally, the mining projects are much larger in size compared to the road construction projects, but the time period of completion of these projects is also longer. Generally, about 1.5 to 2 years are required in completing a road construction project, whereas a mining project may take somewhere around 5 years for completion. So the revenue gets split into 5 years and they get it on a milestone basis. And there may be some hiccups in the mining projects like the land allotment, etc. may take time. The fourth model or the fourth segment they work in is the HAM or the BOT part. For this business, they generally set up a special purpose vehicle, which is another separate company under the same umbrella. And in that, the government and this company both invest jointly and build a project. So if you see the standalone financials of this company, you'll find that the margins are lower because business is mainly related to the EPC business. And when you see the consolidated financials of this company, you see the margins are higher because that includes the business and profits from the HAM projects. In this model, what happens? KNR invests the money upfront along with the other authority, which is the one which is allotting the project, builds the road or any other infrastructure project, and gradually recovers the money over a period of time. I'll give you a little more clarity on the two business models in which this company works. The first in the EPC model. In EPC model, the KNR applies on various government tenders, wins the project, constructs the project, and on a milestone basis, as and when it gets ready, they get their payments. So comparatively, the margins are lower. There is no capital investment from KNR in that project. So the capital required to do that project is lesser. Margins are lower. The revenue is recognized faster and the payments are comparatively faster than the HAM project. The second model, which is the HAM model, wherein KNR invests roughly about 15-20% of equity in the project along with the other authority. The project is constructed under special purpose vehicle, which is another separate small company which is established specifically for this purpose. 60% of the construction cost the government generally pays upfront, and the remaining 40% along with the interest, it is paid over a longer period of time. So in this, the EBITDA margins are higher. The company gets predictable long-term cash flows in annuity model. So this makes the business more stable. But for this, capital investment is required. So the KNR may end up borrowing money for these kind of projects. So it is an asset heavy business. You can always put numbers, but it is very clear that this industry, as the government wants the country to prosper, there is huge amount of penetration still left in the civil construction space. So the industry size is very large. In the first half of FY26, the tenders and the contracts awarded were very less compared to earlier. That is why this industry is suffering. But the overall pipeline remains healthy, about 3.5 lakh crore in the road construction projects. But when this actually materializes into orders and when the projects start is a big question now. And in the longer term, the government expects to award around 10 lakh crore worth of projects in this industry. Volume wise, the road construction industry may grow around 9% CAGR in the next few years, but there is lumpiness in this industry. Among the listed peers, although this sector has some entry barriers, but there is high competition. Companies like PNC Infratech, HG Infra, Ashoka Buildcon, J Kumar Infra, several companies compete with KNR Constructions. There are many unlisted companies also which do. Then what is the competitive edge of this company compared to its peers? This is not a very asset-light model. They also own some machinery which they use in the construction projects. So if a new company wants to do this, they do not have those fleet of vehicles. They have invested more than 1400 crores in their equipment so far. They don't do much of subcontracting. They do all the projects in-house using their own team. And they have a track record of more than 9,000 kilometers of road construction already done. So if a new project is coming, the government always have an inclination to give it to somebody who has already done this kind of a venture. What are the entry barriers in this business? There is some qualification in terms of financial position as well as capability which is required to bid any project. So this company, as they have been into this business for a very long time, as they have done a lot of projects, they are pre-qualified for several large projects. For a new entrant, it is not possible. That is an entry barrier here. Sometimes the projects need a lot of capital to execute. So that could be an entry barrier for a smaller company. There should be the execution capability in the smaller company to do such kind of a project and do it safely, as the normal public are the users of these infrastructure projects. And relationships with the government authorities also matter a lot. What are the growth plans of KNR Construction going forward? Right now, the management says that this is one of the worst times that the company is facing during their last few years of journey. They have an order book of about 8,700 crores and they expect in FY26 the total order flow would be between 8,000 to 10,000 crores. In the last quarter of FY26, they expect a big rally in the projects that are awarded from NHAI. This is only a hope that they have. They have an irrigation project backlog of more than 1,500 crores. They have won a mining project as a joint venture worth 3,500 crores, which will get executed over a period of 6 years. They want to venture into the solar energy space, the BESS area, railways and metro rail projects. But the management is not giving specific revenue or margin guidance because there is a lot of uncertainty in their business right now. What are the risks of investing in a business like KNR Constructions? It is a lumpy business. There could be prolonged up cycles and down cycles. It depends on the government policies when they want to award the projects, whether they are executing the projects smoothly or they are putting them on hold. It depends on the budgets of the state government and the central government, how much money the central government is approving for these projects, how much the state government is approving. So there is a lot of uncertainty in this business. The projects that they execute, the receivable cycles are long. Sometimes they even lose the money. Sometimes they receive it very late. So it's a very working capital intensive business. Sometimes they complete the project, but they don't receive an approval to bill it. So the unbilled receivables also become very high. So there the money is also stuck. The HAM projects need capital investment from companies like this. So their capital is also stuck in some projects. If they take up a very big project, then there is a risk of business concentration. If that project gets delayed or puts on hold, then the business gets impacted. And in history, this company doesn't have a very clean track record. They have had issues with various governing bodies like SEBI, and there are some CBI cases in the past. So the track record is not very clean. So with this, we come to the end of the first segment of the video, which is the business analysis. Now we'll talk about the financials. There was a steady growth in the revenue from FY21 to 25 from 2,900 crores to 4,753 crores. But you will notice that in the last 5 years, although there was growth, but the pace of growth has slowed down. The 10-year CAGR revenue was 18%, 5 years was 14%, and 3 years is 10%. So you see that the company was growing, but there is a slowdown in the revenue growth. And this slowdown further led to degrowth in the first half of FY26, where the revenue fell. So on a trailing 12-month basis, you see a dip in revenue from 4,753 crores to 3,083 crores. Similar trend you will notice in EBITDA also. The EBITDA increased up to 1,600 crores, but now in trailing 12 months, it has fell down to 853 crores. Margins have also started weakening. The margins look slightly stable because of the HAM projects that they have. The promoter holding has fallen below 50% because they have been gradually reducing over a period of time. The operating cash flows are very weak. They have negative operating cash flows. The borrowings are increasing, 2,321 crores of debt on the balance sheet. The receivables are going up. The unbilled revenue is going up because they are completing the projects, but they are not billing it. There are a lot of special purpose vehicles, subsidiaries formed for various projects. So the Group structure becomes a bit complicated. As a consequence of this, the related party transactions also become very complex. And sometimes the main auditors of the company rely on the audit report of the subsidiary auditors. So that also becomes a gray area. For doing various projects, the company gives loans and deposits to their subsidiaries. That becomes a gray area. And there are high contingent liabilities also on the balance sheet. So overall, the financials are not very clean as such. Now, if you look at the shareholding pattern over a period of time, in 2017, the promoter stake was about 57.95, roughly about 58%, which gradually reduced to almost 48.8% now. So there's a declining trend in the promoter. 2024, we see some selling by the promoters, and the number of retail shareholders, which is in the public category, are constantly increasing. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my view on the market. I share some sectoral views and some tips and tricks to improve your portfolio return. It's a free channel and more than 9,000 people are daily in touch with me through my Telegram channel. Now let's come to the last part of the video, which is the valuations, which is the most critical part. On face of it, you'll find the valuations of the company very cheap. It is trading at 6x EV EBITDA, 0.8x price to book, less than 1x price to book. But we should see whether this is a value buying opportunity or a value trap. The reasons for the sharp decline in the sale price from 400 to 150 are as follows. There was some debarment which was done by the NHAI, where one of the projects of KNR Construction failed related to NH66. So this debarment was a very bad news for this company, which is more or less sorted now, is what the management is saying in the recent earnings call. The quarterly numbers became weak in the last few quarters, and the management expects that going forward also the numbers would be weak. And the working capital became a challenge. And once the stock price keeps falling, all the bad things that the company has done in the past come into the limelight. This led to the sharp fall in the price. Now, on face of it, the valuations look very attractive. But if you see the chart, there is no support. The price is falling like a knife. So at this point of time, let me give you my views both technically and in terms of fundamentals. If you see the chart in terms of technicals, the stock has not started taking support, or it has not started forming a base anywhere. So it is very risky to enter such a stock. Now coming to the fundamentals, although the valuations on face of it look cheap, but the visibility of growth in the near term for the next few quarters or 1 to 2 years is very weak. It is very uncertain. So till you get that clarity as an investor, it doesn't make sense to invest in any company. So both fundamentally and technically, the stock is an avoid now, and you should give it some time. Let things get normalized. It is better you get complete clarity on the stability of the business and the clear growth prospects of the near term before you think of investing in such a company. And if you're already stuck in this stock, it is better to come out once, let things stabilize. And if you feel that you have got the clarity, you can re-enter the same stock at a similar price where you have exited. That's about KNR Constructions. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to our channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel by clicking the link in the description. Thank you for watching and have a wonderful day.